MD of Prabhudas Lilladher, who is here with me. Mr. Bhatt, welcome to BTVi. There is so much to really ask you at this stage, but apart from your reaction to the lead so far, I really want to ask you, history suggests that post-elections, information technology, the banking space, financial, consumer discretionary sectors perform better than others. What would you advise investors at this stage, those who are looking towards the market for returns?
Well, I think just to begin with this fact that the political uncertainty is very comfortably behind us at the moment, and I think the last two to 3 days we have seen that the Nifty has gone up by almost about 900 points, and today itself it has given up almost 200-250 points from that level. But I think on a broader basis, I think now we'll come back to the realities and the reality check will happen. And possibly I think some of these sectors which you mentioned are the ones which are engaging the attention of a lot of investors in a very apprehensive way, because these are the some of these sectors have really felt the brunt. Not so much as IT as what you mentioned, but I think it's auto, it's NBFC, it's real estate, and you just name it, and some of these sectors have taken it. So I think possibly we have a budget to deal with maybe in the next 1.5 months, and that possibly we'll see that how the government really navigates some of these issues at the moment, and how they will raise the extra resources to stimulate the demand, which is what the primary requirement is. So I think from the investor's perspective, maybe one can do an SIP kind of a thing spread over next 3 to 5 months, because there's so many uncertainties. I mean, the political uncertainty is over, but economic factors still remain an issue, and international events are still not settled down. So I think against that background, I don't think there should be so much in the investor should be so much in a hurry. They should invest without any doubt for a long 1.5-2 years investment, but they should do it very gradually.
Mr. Bhatt, since you mentioned a stimulus, do you expect the Modi government to deliver a stimulus for the economy?
So when I said a stimulus, I think what I said was that they have to garner some extra resources. For example, I think can RBI give them another about 75,000-80,000 crores by way of dividend for this year? Very much possible. Now whether they'll be able to do another innovative kind of disinvestment strategies and raise another 75,000-80,000 crores, very much possible. Because in the last fiscal year of FY19, we saw government cut back on the expenditure of close to 1 lakh crore. And I think that's a very big amount. At this stage, what you require is to spend and not to cut back. And which is what I mean by stimulus, is that government will really have to get into that spending mode, especially in the initial years, so that they can step up the revival process and bring about a good multiplier revival of the economy.
Mr. Bhatt, one more point that I wanted with you. How much do you think the RBI should be cutting interest rates? A big cut, would that make a difference? Especially in the context of the overall cost of borrowing, where in the last 30 months we have virtually seen most of equity eroded in many companies.
Well, I'm not so much a votary of or a supporter of interest cut really stimulating the demand. Yes, it is without any doubt that interest cut really helps, but that can only be a collateral or a coincidental kind of a thing which can support the main thing. But unless and until your main engine is not working properly, I don't think the interest cut really is the one which will really make much of a difference. I think more than interest cut, it is the availability of funds, because we are seeing the stress the NBFC is going through, and because of that the repercussions we are seeing across so many sectors, whether it's consumer durable, automobiles, two-wheelers, three-wheelers. I think some of these are feeling the pressure of that. I think more than apart from interest rate, they should also try to see how the liquidity is available to the industry, who in turn can invest and who can start using, so that the cycle starts moving and in a much faster way.
Very clearly, that is a significant point. Mr. Dilip Bhatt, thank you very much for joining us, because we